This week, the Fed has a big decision to make. We've been talking all month about Jerome Powell and the Federal Reserve's monetary policy plan, and on Wednesday, we'll finally see it put into action. FOMC happens Wednesday, and the Fed is expected to raise interest rates 25 basis points up to 5%. Let's see what other news we have happening this week. On Tuesday, the Canadian CPI report will be released, expected to remain unchanged at 0.5%. On Wednesday, along with the FOMC report, which you can watch us cover live right here starting at 1:30 p.m. Eastern Time, by the way, we also have the UK's CPI report expected to drop slightly down to 9.9%. Both Thursday and Friday are incredibly busy days. On Thursday, both the Swiss National Bank and the Bank of England are releasing their new monetary policy statements, with the Swiss rate expected to raise 50 basis points up to 1.5%, and the UK's rate expected to raise 25 basis points up to 4.25%. Also on Thursday, the United States will release their unemployment claims numbers. And finally, on Friday, French, German, UK, and US flash manufacturing and flash service PMI numbers will be released along with the monthly Canadian retail sales numbers. All right, everybody, let's go ahead and check out the market heat map and see how some of our assets are trending so far today. So right up top here, the first thing I notice is gold is up a massive 3.41% on the day so far, followed by the NZD USD, GBP NZD, Euro NZD, Aussie USD, and Aussie NZD. So it looks like New Zealand dollar crosses seem to be making some nice moves to the upside. Down here towards the bottom, however, I see CAD JPY, USD JPY, CHF JPY, Euro JPY, NZD CAD, and GBP JPY, and I'm even going to throw in Aussie JPY right there as well. Yen crosses certainly seem to be selling off on the day so far. Before I show you the watch list, I want to show you our newest feature that we have in the Edge Finder, our Bank Signals tab. And this is a really cool feature that shows you we have all of these different banks, both US and international banks. And these banks have research teams that put out projections on a monthly and a quarterly basis for where they think certain assets will go. So for example, I can show you right up top here, Citibank, their research team believes that Euro USD on a monthly target will be somewhere around the 1.1 price range. That's their projection. And on a quarterly target, they believe it'll be around 1.15. Again, that's their projection. Down here, we can also see analyst ratings, certain big name analysts in the industry. Do you want to become a funded trader? At A1 Trading, we partnered up with Superfunded to give our community an amazing opportunity to become a fully funded trader. Superfunded is a prop firm brought to you by 8cap. So if you're a fan of 8cap or A1 Trading, then you're going to love Superfunded. All you have to do to become funded is pass one of their examinations. You'll have 90 days to pass, and once you do, you'll be granted a fully funded account. It's great for both swing traders and day traders, and they even let you hold your positions over the weekend. They have different examinations for different account sizes, and you can get a 10% discount on your examination with promo code A1 Trading. So if you want your own funded account, go check out Superfunded in the link down in the description below, and don't forget to use the promo code for a discount on your exam. Their bias is on a weekly, monthly, and a quarterly bias there, and then same thing for the bank ratings right here. We can see it on a monthly and a quarterly bias there. So super interesting information that you can kind of use hand in hand with the Smart Money Tracker to see if smart money and banks and analysts are agreeing that they believe certain assets will be around a certain price range on a monthly, quarterly, and even a weekly bias in some instances. So super cool super cool new tab that we have here. These horizontal dots that you see, or excuse me, vertical dots that you see here, these vertical kind of columns of dots right here, these are actually the projections. So if you hover over them, you can see who it is. So for example, I can see there's Wells Fargo's research team on a monthly bias where they believe Euro USD will end up could potentially end up. But yeah, super cool feature available in the Edge Finder. I'll remind you that we do have the 3 different versions of the Edge Finder available: a free version that you can get in the link down in the description below right now, as well as a basic and a pro version. And if you're interested in the basic or the pro version that come with lots of really cool features like that bank signals tab, you can get it at a discounted price when you use code A1YT at checkout. But let's go ahead and get into our watch list, take a look at our buy and sell list. Not a whole lot of buys listed today, but a lot of sells. Let's go ahead and remove any indices or commodities that we might have, just so that we can focus on our currency crosses, and that shortens up our list just a bit. But USD ZAR and USD CAD, both strong buy biases like they were last week, scores of +7 there. And we have 2 strong sell biases, Aussie NZD and Aussie USD, both strong sell biases, scores of -6. So we have to figure out which cross we want to take a look at, and I kind of feel like starting the week off on a buy. I took a look at USD ZAR on Friday, so if you're interested in an update or a breakdown of the US dollar and the South African rands numbers when it comes to COT data, retail sentiment, GDP growth, inflation, unemployment, interest rate divergence, you can get updated numbers by checking out Friday's video, our top buy, top sell video. But let's go ahead and take a look at USD CAD. Strong buy bias, score of +7, like I've mentioned. COT data, a score of +1, and retail sentiment, a score of +1 as well. So right over here, COT data, or institutional trader data, currently favored long on the US dollar, 65.4%, and 34.6% short there. On the Canadian dollar, however, we're so close to crossing that 60% mark to give this a +2 score for COT data, actually being favored short on the Canadian dollar, but we're not quite there, not quite to 60%, 59.5% short and 40.48% along there on the Canadian dollar from institutional traders. But I think it's still safe to say that institutional traders are favored short on the Canadian dollar. Retail traders, day traders, also favored short on this pair as a whole right now, 75% short, 25% long from the day traders. Seasonality is a score of +1, and we can see that in the month of March over the last 10 years, historically speaking, when you isolate the month of March and see how USD CAD has trended, well, it's trended a little bit bullishly, and of course that has been the case so far this month as well. Our trend reading is a score of +2, and we can see that it made a nice little spike a few days ago, came back down since then, and it has steadily just come up just a little bit from where it was over the weekend. It's up a little bit on the day so far. Price forecast projects that it will continue to move upwards, but over the past couple of weeks, this thing has absolutely just continued to make moves to the upside, moving higher and higher throughout the week. Let's finish up with our fundamentals. GDP growth, unemployment, and interest rates, all scores of +1, and inflation are one lone red box there, a score of -1. So US GDP growth currently 2.7% compared to 0% in Canada. US inflation 6% compared to 5.9% in Canada. Unemployment in the US 3.6% compared to 5%. And the big one here, interest rates, US interest rates expected to raise 25 basis points up to an even 5% here on Wednesday, compared to 4.5% interest rates on the Canadian dollar. So there we go. USD CAD, strong buy bias, score of +7 breakdown for you.
I think we should talk about dollar CAD, which is also another one to pay attention to. You can see dollar CAD pulling back to support here today. I actually like this thing on the long side currently. I just already have that Euro USD trade. Now this is a daily chart, so this is longer term, but you've got some past resistance here, which is held very stubbornly for the bulls. And I'm watching to see if it can hold again, right? The dollar has pulled back. We've got a Fed meeting this week. It's sort of expected that we get a 25 basis point rate hike. This is sort of the consensus. Now, any surprises here will, of course, cause the market to move dramatically on Wednesday. But currently, that's sort of the expectation. We see the dollar in anticipation of that sort of moving down a little bit. Like I said, I think that there may be some pullback opportunities on the 4-hour and daily charts. That's why I'm looking at things like dollar CAD, etc. And also why I think that, some sort of a pullback for gold is probably coming if the dollar sees any strength. So we'll see. And here is, by the way, here's your DXY. look at the dollar, you can see it is at the very extremes of this support zone. We'll see if the dollar can catch any sort of a rally, any sort of a bid here, but it's not looking too promising at the current price. Let's look at some other charts and see what else we've got here. We've got, like I said, the S&P 500, the indices looking kind of sketchy here. You've got a downward trend. This is a 4-hour chart view. You can see we've got a downward trend going on where, again, each time this thing has rallied, it's made an attempt to rally and then found resistance. Now, currently, we also have a little bit of a higher low concept going on. And watching for a breakout this week could be interesting when looking at something like S&P, NASDAQ, US 30. If we get some sort of breakout to the downside, it's perhaps an interesting one to look to see if it wants to continue short side. That would be my take on it. Again, if it breaks to the upside, we'll reconsider things. I don't love shorting the S&P personally. However, this market just looks very weak and each rally gets sold into. And until that dynamic changes, it's something I'm looking to be more, stay away from the long side, if you will, until something changes. So that's where I'm at with the S&P 500 as well as the NASDAQ. We can also take a look at that and see NASDAQ a little healthier, to be honest, than the S&P 500. We had a big pop last week. Bank stocks took a really big hit, but NASDAQ stocks performed a lot better last week. And so a pullback on this one could actually be interesting to see how the bulls respond. Like I said, technically it looks good, but fundamentally I don't love the NASDAQ either for now. We'll see if that changes. But again, bulls, keep an eye on this technical level, 38.2% retracement off of these lows. Looks kind of interesting for me. So that's NASDAQ 100. By the way, you guys, if you would like access, we do have some free trials available today. If you guys want to access the Edge Finder, if you want to play around with the software, if you think it would be helpful to you, we are doing tours of the Edge Finder. If you want access to that, head over to our website. We're going to drop a link in the chat. If you click this link, it'll take you to our website where you can chat with somebody to access the free trial of our Edge Finder. So if you want the trial, click the link that's just been dropped in the chat, send that message, just send the word trial or ask about the Edge Finder free trial. And one of our team representatives will set you up to check out the software for yourself. Let's take a look at the Smart Money Tracker and see where we're at going into this week. You've got some interesting dynamics here. You've got JPY heavily short, which I think is very interesting considering the yen was quite strong last week. You've also got SPX still in a very short biased camp. You've got the 10-year also in the short bias camp. The Canadian dollar, very short, US 30, very short, and Aussie, very short. NASDAQ 100, the best of the worst when it comes to indices. You got NAS 100, still short biased overall by big money, but lesser so than perhaps the S&P and the US 30. On the long side, you've got things like gold, very heavily long. You've got dollar, very heavily long, euro, oil, and JP225. So an interesting dynamic, to say the least there. You've got bias. And one thing notably, guys, this is the Japanese stock market as one of the biggest long percentiles compared to the yen currency or the Japanese currency as one of the biggest short bias currencies. Very interesting to see those two extremes.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.